Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 24th of January 2016 and we're producing the first of our subscriber videos, and it's by Al from Arkansas and his view on the functionality of full reserve banking. For those new to this channel, we have subscribers who sign up to our website at www.illuminatisilver.com, and one of the offers we have given our free members is that we will, where we can, produce a video for them on a precious metal or finance related topic, providing they provide the text. This is the first in what we hope will prove to become a popular series. Okay, this is Al's view on full reserve banking. Quote, 1,000 years ago, all of the world's functioning banks used full reserve banking. In an era of almost no parity across the world, it is interesting today that all countries in the world have a fractional reserve banking system. On top of that, all but a few extreme outliers, like North Korea, have a central bank which controls monetary policy. Full reserve banking must then be clearly inferior to fractional banking and archaic as the abacus, right? Well, maybe not. Before diving into the functionality of the full reserve banking system, it would be good to have a running definition. A full reserve bank would keep all of demand deposits in the bank's possession and would likely charge a fee to store the depositor's money. Fractional reserve banks, in contrast, keep only a small percentage of demand deposits on hand and lend the rest out to earn interest, but typically pay the depositor a small amount of interest on their deposit. With the definitions out of the way, let's dive into the meat and potatoes. The smoke and mirrors game of fractional reserve banks is revealed through the illusion of money. Both banks promise the depositor that he can take his cash out at any time. But clearly, only one actually has the money on hand. This seems to be a major flaw in fractional reserve banking, but usually it can be worked around since many other depositors have money in the bank, and the bank can use its fraction of reserves to pay out a few customers at a time. The problem does then arise when bank runs occur. When a lot of people lose confidence in a fractional reserve bank and try to get out all their money at the same time, the bank cannot pay out its obligations since they are in loans, so the bank goes under. The governments of the world have created a system to combat bank runs with government-backed insurance on relatively small accounts, and central banks act as a lender of last resort so banks don't go under. A full reserve bank would eliminate this risk totally, since all depositors' money is actually still in the bank. This does not mean the full reserve system isn't without its flaws, however. A major hurdle for a full reserve bank is its ability to profit and make loans. Since a bank has to keep all demand deposits on hand, the only way to make money on this is to charge a fee for storage. The average consumer is used to getting paid for bank deposits, so a fee to hold their money may prove a major psychological problem of the system, especially since many governments offer insurance for most deposits anyway. The other major issue is the loanable funds market. Without banks using excess reserves for loans, the need for credit for the world would fall to other entities, such as loan sharks. This issue could be alleviated through a device many banks already use called a CD, or a certificate of deposit. CDs offer depositors a higher interest rate than checking accounts today, but cannot be redeemed on demand without a serious penalty. This keeps the loaning system up and running smoothly. That's the end of the article. So what are your thoughts on Al's article? And what advantages and disadvantages do you foresee with what he proposes? As we wish our subscribers to express their views freely and without fear, all that we ask is that whether you agree or disagree with Al, that you express your opinions in a constructive and non-offensive way. We hope to hear your views and wish to thank Al for his contribution. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at www.illuminatisilver.com and look at our Facebook page, which is updated daily at www.facebook.com/Illuminati Silver. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.